Hey guys, Kill Stokes here, and in today's video, I want to walk you through a real trade from start to finish that one of our traders shared with me this morning in our live room. Now, this isn't just about one trade. What I really want to show you is the four-step process that I believe every trader should follow when breaking down a price chart if they want to stay consistent in the market. So we'll go step by step through how to analyze the market, identify high-quality entry reasons, and use indicators properly for confirmation. We'll even look at multiple techniques for projecting profit targets as well. Now, what makes this video so special is that the trade actually came from one of our tier 1 trading members, so I can't take credit, but it's an awesome example of trader development. Just yesterday on the podcast, we spoke about how many traders feel lost when they look at a chart. Well, and today you'll see what it looks like when that confusion turns into clear rules, clear expectations, and a clear plan on how to get into a trade. So if you ever wondered how consistent traders actually think when going through a setup, you're going to want to stick around for this one. I am following the New Zealand yen. It is on a structure level on the daily. New Zealand yen daily. It is at a structure level on the daily. It had a rejection on the 4-hour and double bottom on the hourly. There is RSI divergence. All right, so let's look at this. Let's go through some IPDE here. It looks like we're going from daily to 4-hour. So first step, identify. Let's identify where price came to, right? So I'll throw my horizontal line right in there. And let's look to the left to see where we are at. I can't speak words today. Are we at a level of structure here on the daily? Or are we in the middle of no man's land? What would you guys say? We're at the middle of no man's land. Okay, so that's our I, right? Identify. Hopefully Amon's watching the recording. Our I. We identify that we have a recent breaking close above structure. We are in the middle of no man's land. That allows us to make the prediction that price is likely to go in what direction? Higher or lower? So we've now made the prediction that price is likely to go higher. Now we know that the prediction is a multiple kind of step prediction, right? If price is likely to go higher, then where is price likely to go to? And there's different ways you can do this. You can use your different forms of analysis depending on what you value. I value structure, so I'll always look for the next level of structure, but you can use fibs, you can use even handle numbers, right? Whatever it is that you use to make your prediction, whatever tools you use, even indicators, I guess. What you want to do is you want to identify where do you think price is likely to go to next, because that's going to tell you if there's room for tradable opportunities. Now, I think we can agree because we are in such a no man's land, right? Even if you wanted to take this little kind of rejection spike right here into account, I think we would all agree that there is opportunity to go higher. Would anyone disagree? Like there's room to profit on this, right? We would all agree about that. All right, so we know there's room to profit. The next question is, okay, well, if we're likely to go higher, right? Not just how are we likely to go there, or not where are we likely to go, how are we likely to go there? We know that a pullback is one, so boom, we got our pullback. So we've gone through our I and our P, and we've pretty much created our directional bias on the market. I think we can all agree we're predicting that price is likely to go higher, and we see this as an opportunity where price can go higher. All right, so we've got that out the way. Now that we have our directional bias, now we're going down and we're going to ask ourselves with the D section of our IPDE, decide how do we take advantage of it. And going back to what Branko said, going down to the 4-hour, so dropping down to the lower time frame, boop, and looking for a double bottom with RSI divergence. All right, so do we have said double bottom, right? Am I gonna get it right? I did get it right, look at that. We do. Beautiful textbook double bottom right there. Right? It does come at the top of our previous kill zone. We know our kill zone is from our previous swing high right here to our previous swing low right there. So it comes at the top of our kill zone. Let me just make sure that is, well, our lower time frame kill zone. Our higher time frame kill zone would end right there technically. Or the lows, I should say. But all right. There is no oversoldness depending on what your RSI settings are. Again, mine is a 7. If you had a default 14, we'd be even less oversold. So if that's a requirement, right, if you're going through your checklist, if that is a requirement, a non-negotiable, then what would happen to your trading opportunity? When you get to the D part and your decision, right, says that you need a double bottom with RSI, oversold, and divergence, if just one of those things are missing, can you take the trade or can you not take the trade? Yeah, so no trade. If that's a requirement. Again, I don't think Branko said that, but just putting it out. So, but let's say all you need is a double bottom. And I think he said RSI divergence. You got both of those. Looks like a good entry for you guys. Good trade. Entry is right here at the completed double bottom. And I'm missing a lot of comments. I'll go back through. Yeah. All right. So now the next question, and I'll leave this for you, Branko, first. Stop losses. So I think stops are going to be a little bit interesting with this one. I'm going to get this into the pro trade log real quick, but I don't want to do that yet. Sorry. But talk to me about stop losses while I get this into our dash. Branko says I put stops 1 ATR. I'm assuming 1 ATR when you say ATR, 1 ATR below the double bottom. So we can take you through that process as well. Keel strategy development, Greystone daily chore, structured trading. You guys have been active. Pro trade log. There we go. Mo says aggressive, stop below the low. That doesn't tell us anything though, Mo. We need details, right? Remember, if we're talking to a trader and I say stop below the low, I can't actually take any actionable items. All right, so let's figure out this ATR. So ATR, this green candle, because that's the most recent candle below the double bottom, that's going to be 39. The low of our double bottom is actually going to be the same as our entry candle, right? So this is going to be 91.39. Look, made perfect sense. Look at that. So a 1 ATR stop will put us right at 91 even. Now you already know what I'm going to ask. You already know. What you think about this stop loss? Fool. Emma says, no, not there. No. No. So now here's the interesting part. And this is again, I told you guys stories about how in my trading journey, because of after being very, very stubborn as a trader, I've learned to be less stubborn and give myself options in my rules. So it's a fence of rules, but I can exist somewhere in between them. If your rule says stops must go 1 ATR below the low, you can't change this. Is the pro trade log just on the normal chat on the platform? Yeah, just go to the groups and load up, follow the pro trade log group. And it's whenever we get ideas from the live room, I put them in there. Just 'cause I know a lot of people like to go back and kind of track what we're looking at and stuff like that. Yeah, not a signal service, obviously, but people like to kind of know what we're looking at. So yeah, just go to groups and find it. Yeah. So if my stop loss rule says 1 ATR, can I move this stop? No. You got to bite the bullet. But remember what we talked about when the room opened? I said, hey, as traders, we are our own bosses. We can make our own rules, for better or for worse, right? But I trust you guys here at Tier 1 to do it in a professional way. So 2 things you can do. 1, right? My rule is a 1 to 2 ATR. So minimum 1 ATR, maximum 2. And wherever that exists in that zone, I can wiggle it about. That way I can avoid things like structure. I can avoid even handle numbers. Or Branko can have a simple rule that says, if stop loss lands on an even handle number, then I'm allowed to shift it 5 ticks down or 5 pips down, whatever like that. So, but I would advise not being at 91 even. If you can, maybe get to like a like a 90 97 or a 90 93, something like that, right? But yeah, stop losses here. And now the next question, Branko, where are you looking for targets? Yeah, I learned that the hard way by being very stubborn and consistently having my stop loss at like 91.01 and getting stopped out by 1 pip, and then the market going in my direction and me smashing computers. Yeah, it only took me a few years. But understand, in my trading journey, I went from kind of both extremes, guys. I went from, let's see if I have a picture for this. I went from a wild cowboy. We have any cowboy pictures here? Yeehaw. Nope. Cowboy. Nope. Anything? Yep. Oh. No. Okay. Well, imagine like a wild cowboy. Maybe there's a horse or something. There we go. I went from wild cowboy with no rules, just like pulling from the hip and gunslinging, right? Getting shot most of the time, to understanding that like doing so lost me a lot of money. So then I went all the way to the extreme of being like really like super conservative. It's like very strict rules, because I needed that. I needed very strict rules because I did not trust myself to not break those rules. And then as I gained experience, I was able to experience and trust, I should say. I was able to loosen up those rules a little bit and learn how to make rules-based adjustments. So that sweet spot where everything is rules-based, but I do have that kind of discretionary freedom within those rules to kind of trust myself. And that's where I like existing. Everyone's different. I would not advise being a wild cowboy or a cowgirl. But there's nothing wrong with being super strict. This is, again, part of the whole concept where we talk about, discovering your trading personality. Who are you as a trader? And a lot of you as a trader has to do with who you are in real life. Do you look both ways before you cross the street? Do you always wait for the sign that says walk, even if no cars are coming? If so, you're probably super conservative. Do you not look both ways? You just run and be like, if a car comes, I'll avoid it. Then you're probably a wild cowboy. Are you somewhere in the middle where it's like, hey, you look both ways, you make sure no cars are coming, but if it's a red light and no one's coming, you'll cross? Like, are you somewhere in the middle? That's another example. In yesterday's podcast, right, I spoke about the being super literal with rules. I told you guys, I don't know if how many of you guys heard it. I told you guys a story about my kids and like how I would sometimes park in a place that I'm not supposed to park in, and I would look back and I would get angry stares about, Dad, you're a rule breaker. And I'm like, yeah, but, and I'm like spiraling, like, how do I explain to my kids that like it's okay to break rules, but without like ruining them? Like I'm picturing them like fast forwarding 10 years later and they're in jail and they're at the court and be like, well, my dad said I can break the rules. I'm like, crap. I knew it goes back to that moment in time where I ruined it. But yeah, it's one of those situations. So anyway, targets. What are we looking at? Branko says 93.9. So let's put on a little deal here, finish out this example. 93.90, right below the even handle number, right at the top of our previous level of structure. Look at that risk reward. Hell yeah. Mo says, by the way, did you park there? Yeah, you know I did, Mo. Not yesterday. Yesterday I didn't. No one really came to practice yesterday, so it was clear and open space. But I'm telling you, I was going to. I ain't scared. I ain't scared. No. So good risk reward. Mo says targets 93.68. So Mo's got his targets a little bit lower. Looks like someone's not as brave as Branko. Not judging, just saying. 93.68, which is right here. Still pretty good. So instead of taking the very high of structure, let me know if I'm wrong, Mo. You're taking the start of that zone. Would that be correct? And I'm so late on questions, but I want to get through this first before I go back and look for it. And then 94.04. I wouldn't do 94.04. Now, how about we talk about extended targets, right? Because we looked at our daily, right? This is good for target one, but this is a trend trade for you guys that are trend traders. We identified that the market can go all the way to 96 and 98, right? two options. One, we got our targets already, 96 and 98, your big boy targets, your big girl targets, right? Or if you want to be a little bit more conservative but still aggressive, right? How would we look for targets? How would we predict an extension? Let's put it that way. I don't even want to talk about looking for targets, because looking for targets is no different than doing general analysis. In general analysis, if we're predicting that the market is going to extend, most likely going to extend, what would we do to predict where that extension is likely to come to? There's a few things we can do. Yeah, we can. Yeah, it says it in the name of the tool, guys. Fib extension. Come on, right? Fib extension, swing low to swing high and back down, right? We know that our predicted levels are always kind of 127 is the 1, 1618 is the 2. You can see the 1618 is right above that 96 even handle. The 127 is a little bit lower. I'm curious to see, this is the higher time frame swing. I'm just curious to see what lines up here. Just I'm too lazy to go into a higher time frame. Pretty much the same levels. So you got that. AB equals CD pattern, right? That's another way. This is going to be shallower because this is a deep retracement, but an AB equals CD. Oh, look at that. You got an AB equals CD lining up with the 127. So if you're looking for a little bit of a deeper target for the extension, you've got 127 and AB equals CD lining up with confluence. You've got the beginning of your structure zone right here around the 96 even handle, and then you have the bigger one earlier. And the last thing I would say you can do is this. If you are the bravest of braves, if you are a true trend following trader, what you can do is this. You can say, you know what, Akil? My target is here. And what I'm going to do is I'm going to place my target up here, and then I'm simply going to trail stops, right? Active trade management, which I recommend doing in any type of continuation setup. I'm going to actively manage this trade until price gets to this level. So I'm going to shoot for the moon. I know that the price may not reach the moon, but it might. If it does, I'll take advantage of it. If it doesn't, at least I'm consistently locking in profit on the way up. So even as it reverses, I'll still be taken out with something. So those are three options there. But yeah, very nice looking trade there. I am well behind on questions. Some of them may be irrelevant. I may have answered them already, but I'm going to scroll back and just see if I can find any that Marvell says, if you hit target 1, then you're playing with house money. If shooting for the moon, yes. Now, real quick on that, because we are and we aren't, and I like saying as well, playing with house money, but we do have to remember, and someone brought this up yesterday in the Q&A session, we do have to remember about opportunity costs. Because although it is, and if you didn't watch yesterday's Q&A, go back and watch it. We had a good conversation about maximum favorable excursion and pretty much making the most out of your targets, but understanding the balance of like, hey, the further I shoot, the less percentage they have of winning, and at some point you're going to meet that point where you max out on your targets and it starts to go in the opposite direction. Something you want to consider, and this is why you don't want to you want to be very strategic with when you shoot for big moves. This is why I'm so strategic with shooting for home run trades. If I'm trading a full position and I'm only shooting for this target, right? My full position comes off here. If I'm splitting my position and half my position comes off here, and I plan on taking half my position off at the moon, if this moon position isn't hit enough, I'm actually wasting money. I would have made more money just by taking everything off here. So again, this is why you want to make sure that the trade is in your favor. You just don't want to shoot for home run trades every single trade. You want to make sure it's an actual opportunity where price can go to that level, because then the odds increase of that higher level actually being hit, versus just every trade being like, oh yeah, I know I don't expect it to continue, but like, I'll put a big target up there just in case. Because remember, if we're shooting for multiple targets and we only win on the first target, we're only taking half our position or partial of our position, whatever you break it up. But whenever we take a stop loss, we're always taking a full stop loss, right? So at some point, you got to make sure there's a balance. Where can I find yesterday's live conversations? From our Q&A. Our Q&A, Mo. Come on, you've been here long enough. Every Monday, except for the last Monday. It was a Martin Luther King Day, and I had some service to do. All right, let me just get a couple more questions in, then we'll leave you guys here. Now, this didn't make the cut for the main video, but I want to quickly show you one of my early trading setups just to prove that you don't need anything fancy to get started in trading. All you really need are the bare necessities, a computer, an internet connection, and most importantly, clear rules on how to trade. And speaking of rules, one of the rules that I followed when I eventually upgraded my system was to first educate myself on what I actually needed. That way I didn't get ripped off. It's a scary world out there after all. But if you're anything like me and you don't know much about the tech side of things, I recommend downloading this free trading computer builders and buyers guide. That way, when it's time for you to upgrade, you know exactly what you're looking at. Thanks again for sticking around to the end. Until next time, plan your trade, trade your plan. See ya!